Okay, we are live, 3 o'clock Wednesday. Interesting things going on in the markets. It seems like this whole week, I don't know, this is a pattern I've kind of noticed. We'll see if George feels the same way. The market will like open one way and then go the whole other way the rest of the day. So, George, you want to speak on what we're seeing in the markets and if you think that trend is like what I'm seeing is happening as well?
Yeah, this is nuts. And I'm actually going to take a look. I've been very busy today. I'm going to take a look at what's going on with QQQ and SPY net option sentiment. But yeah, I mean, I wrote about this in a letter yesterday. Yeah, QQQ is sitting at 54, but it has been pretty up and down. SPY has been lower. We'll check it out. Yeah, 17. Yeah, it was 22 at midday. So yeah, I mean, I think what we're looking at here with these option sentiment readings is essentially that the market is very unsure of itself and very unsure of the direction, and like it's been really surprising to see difficult news on Israel. Kind of. Oh, I forgot. I've been forgetting to move this closer, Stephen. You didn't tell me that. This is definitely your fault. Um,
My bad.
is no, I'm just kidding. Um, is is that yeah, like that was not necessarily the response. It went pretty bullish, but we're definitely seeing a lot of uncertainty. And like, yeah, one of the things that we talk about in terms of like, and I think we might have even done it earlier in this week, in terms of like the robots and how they affect the market. A lot of these times, I think they're kind of volleying back and forth to see how ultimately it gets handled. Um, but it's very the market is super unsure of itself, and that's understandable. There's uncertainty around international relations. There's a lot of uncertainty around PPI coming in a little hot. Like that's basically creating worries about long-term interest rates. So we're dealing with a lot of stuff that there's a lot of, I would say, kind of like bear pressure happening, but still also a lot of excitement in tech. And what we've seen this week is like not only tech getting some support, um, but we're also seeing energy getting some support, which is obviously interesting with oil rising, and as we talked about earlier in this week a lot of other if oil rises, a lot of the alternatives like coal also get a little bit of a boost because they say more people will look for alternatives with those prices rising. So we've seen some energy. I've actually seen a pretty strong real estate recovery. And I think that's because like in times of concern, especially if we are going to like a more like war-like difficult economy, like people hold their money away in real estate. So I have seen like a bit of a resurgence there this week relative to how it was performing. So yeah, there's a lot of uncertainty in the market. I do we'll kind of see how this Israel thing shakes out in terms of how that will impact the market. Um, but yeah, we are definitely dealing with a situation that I think it's hard to tell. Um, how everybody's going to see where it's going to shake out. So where you see that opening differently is I think you see basically like test moves with high frequency traders seeing basically how far they can push prices one way or the other, and then you basically have other algorithms coming in and saying after the prices move that it's moving the value, and we kind of talk about that flow. And then after the algorithms kind of work out what direction it's going, then I think we get a lot of like the portfolio managers, like the human momentum traders kind of see the robotic signatures that they expect to see before they can be confident in a market direction. And that's pretty much what Prospero offers, because we are trying to capitalize on that same type of thing. We're trying to sort through a lot of the robotic signatures before we do our recommendation. And our model portfolio, I've got to say, is doing excellently right now. We just actually cleared the hurdle of going over 40% in excess of the S&P 500, and it was only about 20% in excess of the S&P 500 even like roughly a month ago. So a lot of our process around these things and what we're talking about is exactly that. I'm even honing in on how I see kind of these robotic direction signatures in, and then going, about even like I think 3 weeks ago, we were 56 shorts and 21 longs but we've gradually moved that. And today we're actually, I think, something closer to even on longs and shorts. And that's what we've been doing successfully. And that's what, if you have the time, what I would suggest doing in a volatile market like this. And by all means, I would recommend, using the trading letter as a support system if you do this, because there's a lot of good information in there. To look at the market direction and then just kind of like move your portfolio makeup around the market direction. And I think that's the only way to be successful in a market like this.
Okay, yeah. So there's a couple things I wanted to bring up, but before I do, I think it's worth saying that like the model portfolio performance, it's proving that you can do it in any market because you were doing it in the bullish market in the beginning of the year, and now you're doing it in a more bear scenario. And it's not like Kathy Wood, who like her portfolio went crazy when we were in a huge bull cycle, but then she massively underperformed. It seems like the way Prospero signals and your model portfolio is performing, it's like any market. It seems like it could do a decent job, at least so far.
Yes. No, I think that's the really important thing. And I mean, as a trader, you always have to do that. But I think the nice thing is like we're doing it and we're getting above market returns without using options. And I think that that's a really important part. And I think that like some we're holding for a day, but the average hold time on our model portfolio on shorts is 21 days and on longs 29 days. So that is a nice, like, yeah, some of it's going to be quicker, but that is, I think, for most retail investors, realistic hold times. And some of it's going to be shorter. But the truth is, like, there's a lot of people that will advertise in a bull market and do very well. Everybody's a genius in a bull market. There's some people that thrive in bears, but if you're going to be a really good investor, you have to be prepared on even these micro movements to change around your portfolio construction, or do what we suggest in our investing letter if you need a little bit lighter. Like we always kind of say in that like premium upgrade for the investing letter, what percentage of our portfolio we'd recommend for an all long in SQQQ. And that's just a really easy way to cover yourself in some of these like moves up and down. And yeah, I kind of always say there's only a few ways I think to be a successful retail investor. There's the like really hands off buy and hold something like Vanguard Total Return for 10 years. Then there's like a level lower, which is like maybe to pick a portfolio of 10 like blue chip stocks, some of them with growth potential, and mainly just hold those. And then if you're going to be more of a trader, whereas like basically if you're doing anything with your portfolio that is higher touch, like where you're cycling things out, like you have to have a view of the market and you have to have your own view. You have to have economic sources that you read. All of that is fairly essential to be able to, I'd say trade on a higher frequency than even like a 1 year hold. And we're trying to create easier mechanisms to do that. And that's really everything that our app is for. But I think that like a big part of it is that like more people just have to be willing to play both sides if you're going to be a more frequent trader, even if that means being willing to buy SQQQ because you're a little worried about the market or broader forces are worried about the market. I think that that's really the only way to successfully have anything more than a set it and forget it portfolio, where you're even thinking about like beyond like the level beyond SQQ, where you're just like, hey, I'm a little worried. I'm going to go 50-50 long short. Because the nice thing about going 50-50 long short is that like you don't have to be perfect on the market direction. You just have to be good enough at picking winners and losers among shorts and longs. Because if you say have a 50-50 portfolio, unless it's just like a total bull market or a total bear market, like if you can have some success picking winners or losers, you'll have a good portfolio. And that's really what we're trying to demonstrate from everybody, that we're trying to like show a methodology to pick winners and losers, but also balancing that based on what we're seeing in the macro economy and what we're seeing in the Prospero signals.
Mm-hmm. Yeah, so you brought up macro, and I wanted to bring it back to, you mentioned PPI before, how it came in a little bit hot, and yet the market, which you would think would react very negatively, didn't. And it seemed like we've been in this environment where bad news is good news. In other words, like the economy kind of cooling off is good for the stock market. But the reaction today was kind of like good news is good news. The economy being hotter is good for the stock market. So what is it, George? Which way is it?
The only thing I can honestly like make sense of that with is that people are expecting earnings beats. Like it does not make sense. Everybody's worried about interest rates, PPI coming in hot. Like the only thing that fits for me in that scenario is that people are bullish on earnings. And there's a lot of reasons. I've heard a lot of whispers that that tech and AI is not going to disappoint. That people are expecting growth and it's going to deliver, and a lot of people are spending on it. It's no secret. Like everybody hears the scuttlebutt. AI is like hot. So like the idea that that's going to convert to dollars being spent isn't a ridiculous point. So I honestly think that is that's what we're experiencing, and then also dollars being deployed to defensive strategies like energy and real estate, like we're talking about. I think like that's the only explanation that makes sense to me with that PPI reading coming in high.
Hmm. Yeah, so AI might be hot, but it seems like Birkenstock going public today wasn't too hot. I believe I saw it was going to be priced at, or was trying to be priced at 46, and it wound up going public like late in the day, later than usual at $40. I'm not sure. I could check after I say this how it's been trading since. But Birkenstock, I don't know if you have any opinions on that. But then I also wanted to spin into a more like bigger discussion about investing in like fashion, which seems very trendy to me. Although Birkenstock is like the most boring one out of all, so maybe that's why they've lasted so long. But just your thoughts on the fashion industry for stock.
Yeah, I'm taking a look at Birkenstock like what what's gone on today. Oh yeah, it started trading a little later. Oh yeah. I've never seen such a thin chart. It's like I was like, "Oh yeah, it wouldn't have any moving averages." So yes, I think that it's a bad time. Like we've talked about it, it's not a good time for consumer goods. Like especially like Birkenstocks are kind of like more of a luxury item. Nobody needs Birkenstocks that badly, especially if people are expected to cut back. Not a good time. Yeah, it's not a great time. Not a great time for retail. It hasn't been. I mean, other than ARM that everybody knew was going to go off. The last like few years in this bear market have not been great for IPOs. So I think it had both of those things working against it. But a really good example of like how I think about risk as like a pretty experienced investor is like even though IPOs have been bad, even though retail has been underwhelming, I still would not short an IPO just because historically they do so well. And like, I don't like to take that much risk on either side. So while it doesn't surprise me that it did bad, I still wouldn't have been rushing to short it. Just because like the way I view risk, I don't like to invest in any or bet against anything with a long-term pattern of success like IPOs, even if there is a short-term pattern of non-success. So yeah, like I I am until further notice. Like ARM, I probably would have if I was paying more attention, bet on it going up. I didn't, mostly because I have a general policy until further notice that I don't want to bet either way on an IPO.
Yeah, so I mentioned on Monday when we streamed as well. For anybody who's watching, we do Mondays at 11 a.m. also. But I wish these companies would have waited a day to report their earnings because it's Friday the 13th. A little superstitious here, but so there's a lot of companies that get us kind of. There's a few tomorrow. I think I saw Delta was tomorrow, but then Friday we have BlackRock, Wells Fargo, J.P. Morgan, Progressive, United Health Group, and Citigroup, and there's some more, but those are the biggest ones. And I just wanted to mention them and see if you thought any of those are worth taking a bigger look at.
Um, I'm actually like I've got a short on Bank of America, and like I've read a lot of people in the know talking about them having like an earnings problem. Um, so I think that'll be interesting if people are looking for like a short idea. I don't really like to play earnings generally, like in my newsletter, but in my model portfolio that's more like 80 stocks, I'll take a shot at Bank of America. Underwhelming. That's a name that I like on the short side. Um, but we're not like in this market, in this uncertain market, I don't really love playing earnings one way or the other. But yeah, I think that I think that we're definitely in an environment that that it's going to be interesting, and these bank stocks could especially really set the stage for how some of this, like how we even think about some of this like consumer credit stuff. Um, but yeah, I just like I'm definitely just in a position right now where like we're talking about all the uncertainty around these like news events, around even like um around even um some of this stuff involving PPI and like that not coming as expecting. So like the only thing that's being reinforced is we're in a very uncertain market that even the pros can't decide if they're bullish or bearish day to day, week to week, which makes playing earnings that much more risky. Um and and yeah, I think that that is pretty much the way that I would look at this and just like, yeah, I'm normally pretty cautious about playing earnings, but like, yeah, I'd say even more right now. Um, but hopefully they get through Friday the 13th.
Yeah. The next topic's a little bit funny because you actually sent me an article today about how the Space Force is halting generative AI development and using it because they're citing security concerns. And I just edited a video for our socials if anybody wants to check them out. And it was from our last stream how we were like, the future of AI is inevitable, and 10 years from now, like it'll be ingrained in society. So it's funny. It's like I guess the Space Force is trying to fight it, but we'll see how long they last with whatever's. I don't know. You have more details on their situation, right?
Well, yeah, in that article, it talked about how they basically need to invent some new policies and procedures around it, and I would say especially on the security side. But it's so like Space Force is so funny. I actually thought like there was that like Steve Carell show, and I actually thought Space Force was a joke. I actually, when I was like actually talking to the person who we had, the AI person who we had at NASA, and he was talking about Space Force, I was like, that's real. Like it is hilarious to me that it's just like we're already thinking about. I mean, it's so like this world we live in where it's like we've barely even like harness space. We could like just barely land on the closest rock next to us, and we've already like invented like a space military. Like we're basically barely walking in space, and we're already planning fights. I just think is a pretty hilarious like idea of Space Force, and just like I like it's like one of those things where I don't know how often people read The Onion, but all the time, especially like around some like election cycles, like I've started to read stories that like I'm just like, is this The Onion or is this a real headline? And I feel like Space Force is like the perfect example of that. Like this thing that just like sounds like such a joke that's real. But back to like the generative AI thing, like there's the following funny things about that. The first is like that we actually don't have like that our government doesn't possess the best generative AI technology, despite spending way more than any of the companies that do it on AI. It shows how like inefficiently those resources can be used, and like probably what the most advanced AI in the world is with the Chinese government. That's how they hack our systems all the time. By the way, you need AI to hack. There used to be brute force methods, but now the best defense and offense is computer generated. Because if you think about like what it takes to hack into something, like when you think about brute force a lot, you're just like trying a lot of combinations and like maybe trying them in ways that doesn't get you caught. But yes, like I can say pretty confidently that like, Google's DeepMind, like Google, like, very well might have the best AI in the world. But it's probably the Chinese government that has better AI than Google. And by the way, that's why I think TikTok does so well with recommendations, because I do believe they're using government grade AI to make those recommendations so they can spy on us. Like I don't think that's a very, like, maybe that's a provocative point to some, but I think that that's almost definitely what's going on, and why those that, like, I've been on TikTok. One of our things is going, like, one of our videos is going a little viral on TikTok, and I was spending tons of time on that. Actually, I did, like, I'll tell you, in the world at the same time, I was sitting down to lunch today with actually someone, the director of Gaming Wall Street, who were talking about working together. And his, like, I had some friends search basically, like, because apparently, like, when you search Tim Cook in TikTok, our video comes up. But I was just like, I had mainly only asked my friends to do that, and I was like, oh well, they know we're friends or whatever. But I just asked a total stranger, well, not a stranger as far as TikTok knows, he's a stranger to me, because we haven't had any like online interactions. But he searched it, and when you search Tim Cook, our video is the first video that comes up. So that's pretty cool. That's how we're getting all the views. And I think strangely, when you search Cash App too, our video comes up. I don't know why that is.
It's super weird that, like, I tried to like look for differences between that one video and other ones. It doesn't seem like there's too much, like, it seems similar. I guess the content within it is like kind of shocking, so some people can be drawn to like the nature of what the video is actually about. And a lot of people were disagreeing with that it's actually like meaningful. So maybe people getting a little bit commenting and stuff on it helped that video. But yeah, it's very interesting that that one is the one that was so successful.
And I responded to most of them. Like, yeah, I'm sure you've seen that. It's like someone made fun of me for doing that. I was like, why are you responding to all of them? I was like, we get the comment numbers up. Come on, like, yeah, there we go. Get more engagement. But yeah, that's really interesting. But yeah, like, we are shockingly not good in our government with AI. And like, there's nothing better, like no better example of that than them basically having to like shut down usage of it for like, we don't have a chat GPT, we need to figure out like how to deal with this, like, is just hilarious. Like, there's various examples of like government rot that we have, but just the fact that like we don't even have a plan other than like, oh wait, this might be a security risk, we got to shut it down until we actually figure out a plan, instead of like that press release basically had no expectation that our government could build something comparable. They're just like, we got to figure out a way to tackle this again better because we're not building something like this. And it's just kind of funny that, like, especially all the money, like, there's military budgets, there's like all this stuff that they could have been building technology like this, but it just like, it gets spent on like F-35s that we're never going to use, so we could make Lockheed Martin happy, or Raytheon, or whatever.
It's either funny or alarming, but it's like it's almost so alarming. All you can do is laugh that we spend the most in the world and yet can't get that right. The most important technology, of our
There's a lot of
generation.
laugh. Yeah, there's a lot of laugh cries that we like. Well, we've talked about this here. The funny part about it, and the thing that's just like mind-boggling to me, and this is something that we've talked about before, but before we were making a lot of shorts. So, the shocking thing is that the American government is doing things like buying F-35s that are computer operated when China basically gets into our systems at will. So essentially, we could be building those F-35s to just like fly into their zone if we ever go to war or whatever, for them to just be like, thank you, this is my F-35 now. So no, it does not make any sense to be so far behind on AI, yet build weapons that are controlled by computers that could be hacked by that advanced AI. That is pretty silly. Yes. And sad.
It's almost like you have to go backwards. It's like if you can't fight the technology, just remove it, and then they won't be able to hack it anymore. But that's just a thought I just had.
Yeah, go back to square one. Yeah,
Yeah,
until you can secure your systems, there's a concept in like software building called uptime, where it's just like how much it works, right? And like when you're talking about like your advanced systems being penetrated, like you need 100% like success rate there before you build things that can be controlled by computers.
yeah, crazy world. Um, and it's not getting any better for ChargePoint. So I remember the story like a couple months ago, and I believe it was that Tesla standard EV chargers are going to become like the standard for all car chargers starting, I don't know, 2025 or something like that. And since then, ChargePoint stock has gone down. And today they announced that they're raising 232 million via stock sales, which has made the stock plummet even more. And I was just wondering, like, is ChargePoint doomed? Like, what is even their purpose anymore if they have to conform to Tesla's charger at in 2 years from now, or however long it is?
I wouldn't call them doomed, like, but I would probably say like it's only a matter of time before they have to sell to Tesla. I imagine that they might be having those conversations already. Um, but yeah, it's a very good question. Maybe they'll try to get into like another international market, but yeah, like there's a reason that it's gone down so much, and like some of these businesses are just not they're not planned with longevity very well, and people get very excited about it. And then there's one thing that's just like actually like shocking. I mean, this is a real scenario where it's not good, but like um I would say that retail has just become like so fearful, like because they've gotten in all these like short squeezes and stuff of like share issuances. I'd say there's even like an overreaction to dilution. Like dilution isn't good, but it creates such a stampede out of stocks now that like companies are aware of it. It's like, and the reality is like in low interest rate environments, there's really no incentive to not borrow money. But like as interest rates go up, and they have, like equity raises for cash actually become more attractive relative to the debt and like potentially high payments. So like yes, um that part of it is just like really really funny, and like obviously today like it's going down whatever, like they're in pretty much a death spiral now. Like unless they figure out like some new country to work in, or they're probably negotiating with Tesla, and Tesla's probably like we want to pay like $1 a share, like, and they're just like, well, what are you gonna do? Like, tell me when you're ready to take that offer. Um, but but yeah, like I think that is one of my takeaways here, where I'm just like I'm staying 20 feet away from any stocks that I know that like might dilute, because like retail investors and shorters that like know that about retail investors are looking for that blood in the water now for like anyone that like might be issuing new shares, which like honestly it is not a good sign objectively. I'm not going to argue anything else, but it's like not the catastrophe that like has become what it is in retail investors that are basically like in on all of these short squeezes, which is like, yeah, the issuing of new shares is very, 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 very bad for a short squeeze, even though some like the cult members don't acknowledge that now, because like when they're all in on a stock, they don't really want to accept that like something is bad. Only good news, no FUD, as they say, which is fear, uncertainty, and doubt. But yeah, that's my big take. My two takeaways is like, yeah, ChargePoint is on life support at best, but also like maybe some people need to understand that maybe these things are going to get like attacked for dilution, but don't let that scare you away. If you like the business and you think it has long-term potential, that could provide a buying opportunity for you.
Yeah, I remember the saying in 2020, stocks only go up. It's been a long time since that, though.
Oh my God.
Our next news
All,
story,
all of
the
those
S.
people. Well, it's the funny thing about that is there's so many people that I was just like, yeah, like everybody looks like a genius in a bull market. I was like, watch who you're listening to, like blah blah, blah all that stuff. And it's just like the really frustrating thing is like even those people that were warned point blank are just like when they lose money, they're just like all like, no, it's manipulated. It's like, well, that's not really my definition of manipulation. If someone comes up and warns you that something's going to happen, like manipulation implies it's happening more behind the scenes, you know? But if someone's like, hey, you should watch out for this, and then it happens, that's not like the dark, devious thing that people make it out to be.
Yeah, and this next story is the SEC trying to, I guess, fight manipulation and make it more of like, retail and an institutional coming together on Wall Street. So they just changed a rule that was over 50 years old that gave like big institutional buyers who own more than 5% of a stock 10 days to report that change in ownership, and they just changed it down to 5. Now, I don't know why it couldn't be like 24 hours or 48 hours, but uh, do you think 5 days seems reasonable for these like big changing of institutional buyers?
I think that's a great law, and B, I'm like honestly, nobody's has a good reason why there isn't like pretty instantaneous reporting on that, why there isn't pretty instantaneous reporting on just like title transfer, like custody, like in these days of like instant transfers, like why like it needs to take 2 days to settle a stock transaction or like 1 day to settle an options transaction. Nobody has any good reasons for that other than like Wall Street likes more time to like do whatever it is that they do. And like that's like kind of we'll probably have to bleep that out if you use that, like the Wall Street there. Uh but but yes, like and so people understand like the cult of Wall Street a little more, even if people are doing things 1,000% above board, there is like a bit of a fraternity where they're just like, well, oversight isn't good. The less we have, like for the most part, people are backing each other, even if that extra time for settlement or reporting does them no good. And they're just like, this doesn't affect us at all. 10 days, 5 days, we don't care. They will generally be supportive of each other because, like, their game is information arbitrage. And how do you do better with information arbitrage? More time, less reporting. Like, that's what they want. And that's why we built our signals the way that we did, especially in the options market, because we're pretty much giving people instantaneous reporting of the pricing of options, which we found and tests show is uh most of our users will tell you that's a very effective way to see how the price is going to move.
I think a perfect example is the thing we just had happen this past week where you liked Disney, and then like a couple days later, it came out that I think Carl Icahn started a big activist stake, and it's like, okay, we see the signal in Prospero, we don't know why, and then a few days later, we find out why.
Yep, we've seen that. Like the coolest one is definitely like Alibaba twice when we like had it. That was like a big newsletter win, like at the end of last year and the beginning of this one, where it was like where it was definitely like there was the big story about basically like um Jack like new financing for Ant after like Jack Ma had like disappeared and all of a sudden they like settle everything and Ant is getting new financing. And then, before the announcement of them like breaking up and being able to raise financing rounds on their own happened. And like before that, we saw a spike in option sentiment, like a big noticeable spike, upside breakout too. And like, yeah, like it just makes sense at the end of the day how we're approaching things. It's just like, yes, there were people that clearly knew that news that were making options bets ahead of it. And we're just kind of like displaying that. It's not perfect, but it works better than anything else I've seen. Definitely anything else that retail has access to.
Yeah, since I've been here, I've seen it too, and it's amazing. So our final topic of the day before we go into George's model portfolio update is a fun one. It's called buy, trade, sell. We want to change trade, but I haven't yet. Um, I guess the sports were on my mind since the Giants are so terrible. So I picked three stocks that are kind of involved with sports. So we have Callaway, we have Endeavor, which is the UFC and WWE for people that don't know, and then we have MSG, which is its ticker is MSGS. I think it's the Knicks and the Rangers. Um, so those are three stocks today. We have a buy
What is
trade.
the ticker on Callaway? I should have done a better job of looking at this, but
Yeah, Callaway is MODG.
wow.
Um,
Okay, let's say we do not like Prospero does not like Callaway. What is the other one? MSG.
MSGS is the ticker. Yeah, it's MSG, and then the other one is Endeavor, which is EDR.
I can see how this is shaping up a little bit. It's actually funny. Like our last one of this performed pretty well, but a lot of it had like the least likes. Some people felt very strongly that I guess they didn't agree. Okay, here we go. Callaway is the sell, Endeavor is the trade, and MSG is the buy. And I'll just like kind of go through what I'm seeing in Prospero to clue that in. Basically, I'm going to hold this up here so I can see a little bit. I don't know. It has pretty good net option sentiment. It's got higher upside breakout and downside breakout, above average profitability, but something's going on. Its net option sentiment is pretty high. So it's not a great stock to own, but it's definitely something that like, it's definitely the best of those three. Endeavor's kind of like upside breakout is a little higher than downside breakout. It's got 71 growth, which is pretty good, but nothing too exciting in the short-term signals. And then what was the last? It was like what was that symbol again? Callaway was definitely the worst.
MODG.
MODG. Yeah, higher upside breakout and downside breakout. All right, profitability and growth, but like 51 downside breakout, 25 upside breakout, not good. None of these stocks were that great. No, or like in the last two, were not really great in the short term signals. Callaway and Endeavor. But yeah, like all of these are kind of like at least retail touching, and we're basically talking about like that not being the best thing.
Yeah, I could just stress like just because one's a buy and one's a sell and one's a trade, it's like it's of the three stocks, not of the stock market. So it's like if you pick the best apple in a bad bunch, that's going to be the buy for this like exercise. But just what it is.
Yep. All right. Are we doing the like my Excel skills were very popular in the
Drum roll.
Yeah, here we go. We're gonna do it again. This is interesting because like the market has been so I'm actually gonna take a look at prices for a second because the market this is gonna be a tough one. I don't know how, and I'm gonna look at ENVX because that's something that's been on our radar that we dropped that we liked, and it's like it's been making moves. It's not solid enough to add. All right. So let's do our thing. We're doing it. Screen sharing is easiest. Okay. Doing the entire screen. This one. All right. Taking a look at our model portfolio. By the way, like I'm saying, look, we're killing it. Like the shorts are a little bigger than longs, but yeah, I'm very proud of what's been shaping up here. So we're gonna go. We're gonna pick our filter. I think I might actually look at social sentiment might be pretty important. All right, we're gonna do this. It's not the bull filter. This is where I keep all of my filters. Let's see what we were dealing with. I kind of like that one, but I think I'm gonna go back to this one. Option, yeah, I'm definitely gonna do this one. I'm gonna see how many we need. 15. Yeah, I like that setup. All right, we're gonna do this. We're gonna see what we get. And I kind of am like greedy here. I like to have like a really fresh one here. Whatever. We're 2 minutes behind. Because we're live, I'm not going to sit here and make you all wait. But yeah, okay. Here we go. All right, and we're off. All right, we need social sentiment.
I should start a timer. Time you doing this next week.
No, I don't like that. See, I already was like fumbling around and making errors with you just bringing up a timer. We're making investments here. You can't rush good investment, Steven. Have I taught you nothing?
That is very fundamental advice. I agree. If people comment, you want me to read them to you? Because I see somebody did right now.
Yep. Let me know.
Okay, so we got a comment from Was Mitch. He's saying, "Hey guys, planning to re-enter Penn anytime soon. It's way down now."
Penn. I'll take a look.
He put PEN, so I don't know. I know there's like Penn
Oh yeah,
PEN.
Penumbra. I know that one. Let's see. No, not like it's got high net option sentiment. Kind of interesting. Maybe like I like that 93 net option sentiment, but 50 upside breakout and 46 downside breakout. That's not what we're looking for. Oh, PXD just had an update. Ooh, how's oh no, I'm doing my process. I own all three of these, and like Eli Lilly has been like a new. We actually just doubled up. I'm deleting them because it's not interesting to put them in. And we want an interesting. We've got some interesting things here. I am gonna, for the same reason, PXT just had an acquisition. No, not a 46 game. That's. I'm getting rid of some of the favorites that we already have in the portfolio here because MasterCard I might want to get back into. Okay, I think we're set. Well, actually, whatever. We're not doing Eli Lilly or Northside Grumman. We just added those. Sorry. Perfect. These are 15 great ones. All right, so we're going to do that. Now we want to get this. Get that. Here we go. 15. Let's get you in there. Perfect. Sorry, it's 1 second. Okay. Got that in there. Now we want to start doing our technicals check. COO actually like continues to come up. Okay, that's a no-go. Because it's all sell. Like my big regret, I almost added General Dynamics in my newsletter. All right, we're adding that. And it was up like 15% the next day. But I'm not compounding a mistake with my regrets. We're adding it now. All right, what else? We already added Adobe, whatever, FSLR. We just added oh God, not that. We just added ENPH the other day. I guess we're going to be pretty long solar here if we do this, but let's see what's going on. Nope, we're not doing that. Those technicals are not good. Saving us a little time. All right, TDG is already in our portfolio, but it's a little less known. So I'm interested in this Kinsale Capital. I've never even heard of it. What's going on? Oh, look, we're adding it. Great. I do want to just do one more check and just like sometimes I like to do these shorter term and whatever. That's not enough to scare us. Let's look at 2 hours. 4 hours? No, it's not enough to scare us. I like this daily. We're doing it. We're adding it. We're a little more bullish. We're a little afraid of the bear side, but we're looking to add bulls and bears right now. Chipotle has burned me, but yeah, we're not going to worry about that because we have been burned. MasterCard, I also exited not too long ago, but we're going to take another look, see how much things have changed. No, not good enough, MasterCard. Sorry.
Mitch says he likes Under Armour. I have a feeling you're not going to like that one. Our commenter, Mitch. Yeah.
Well, hi, Mitch. I like Mitch. Vertex looks like a go. I will take a look at Under Armour, Mitch, after I'm done with this. What is tell me what the ticker is so I can check it out. Prospero.
UAA.
UAA. Okay. God, we've entered and exited this. All right, we're getting in. We're getting back in. Oh, I keep doing that wrong. We're in MCK. ODFL I actually dropped from my newsletter. But I do find it pretty entertaining. Like, this shows you just like how the signals are sometimes. Like, I do find it pretty entertaining that like a Freightliner is being bid on in options. Like, I definitely like take that more seriously for sure. Where it's just, oh, Wingstop, interesting. I never thought I'd see Wingstop in Prospero. Like, what's going on? Now I'm actually curious. I do look at this sometimes. Okay, it's been down a little bit, but it's been up a month. Like, what's going on with Wingstop? I'm like a little
Wings,
hesitant to do anything in retail right now, but I'm checking out. It's got pretty good RSI. Like, we're adding Wingstop. We're doing it.
Wingstop has to be like a hotter economy beneficiary, right?
Why? Tell me why you think that.
Because if people were pinching their wallets, I don't know, maybe they would just cut off Wingstop. Whereas now that, looks like GDP is going to come in higher and all that, I don't know, maybe people like it more.
Maybe. Oh man, we've seen a lot of these before. This is already in here. We're not doing this. We're not doing that. Not doing that. Just because we played around with those before. iClick, I don't know. I've been burned on that. Sorry now. No. LPL is fine. These are already in the portfolio. Oh no, I don't know if I can do them. I've lost on MTB twice already, but we're gonna look at it. Dish is already in there. Peak Trip. We're not going back in VNet. All right, how many do we have here? We have 18. All right. Any of the rest of these? Wish is the bane of my existence. 18. All right. We're actually just going to make. We're gonna do this the different way. We're gonna make 3 more rows here. Like we found plenty of bulls that we liked, but we're making more rows. So we can have all of these 18. I think. 17 now. How did that happen? All right. That's what we're doing. How are we doing on time? 3:47. All right. I think we're doing great. Perfect. All right. We got to make sure that this comes down. As is this. And then we want to do this. Is this going to? I think this is going to. Yep. All right. Now we're doing our technical analysis on the short side. Health Peak Properties. What's going on with you? Ooh, I don't know about those oscillators. All right. We have to we've got to break the tie here. I don't want to do that. Oh, also, I want to drop UNH. I'm definitely going to do that. I've been watching it today. I don't like what it's about. What was that? Peak? That does a short, right? I don't really like that. Oh, I got it. Jim watched this last week, the guy who taught me this one, and I got to get a better explanation for what all this stuff is. Or we're gonna see if we can even get Jim. Oh no, this is terrible. This is why we do this added check. Like, this is like moving above the moving averages. We have this showing like some buying momentum mounting. We don't like that at all. We are out of Health Peak. Oh, MTB, I really hope you don't do this to me. Don't tell me that you look good. Oh, God. No, 4 hours is. Oh, God. All right, we got to look at MTB. Part of me just wants to say I don't want to touch this anymore, and the other part of me says I want my MTB win. No, I don't think. With all the pain and agony MTB has caused me, we're not doing this. All right, BMPC. BPMC maybe? Blueprint Medicines. We're pretty biotech heavy right now. No, not doing it. Good. I'm glad that didn't work out. I'm sick of biotech. I'm not sure if I'm still in NI. What? No. I was in NI at one point, but I don't think I'm in it now. Nice source. What's going on with you? Nope, not happening. All right, all of these bears. What are you doing while I do this, Steven?
Well, when we started,
twiddling your thumbs.
I watched our most recent short on all of our stuff. I always support with Foster.ai and the Prospero accounts. I watch and like it, so that's what I did in the beginning. Now I'm just listening and learning.
Yeah, now you're just watching me talk to myself. All right, no PBR, SBGI. I'm actually surprised that people seem to enjoy this. Like, I did not necessarily think this would be amusing for anyone, but I guess I go, oh yeah, Sinclair. I hate Sinclair as a company too, so I'm very happy to do that. I mean, I don't know, that's maybe a little bit. I don't like that. I don't like that they are intentionally buying up. I don't like anyone intentionally buying up TV stations to push either side of politics, to make it pretty general. All right, WK. I've been wrong on that before, but we're not going to let it get to us. How many of these do we have? I don't necessarily. All right, we added 1, 2, 3, 4. We added 6. I don't necessarily. We might have to get a little pickier here. Navi has also screwed me over. No, not doing it. Great. I'm hoping this shakes out where we don't like any more of these, but we listen to the signals. That's what we do here. Oh, what's going on with you? Ooh. I'm too overloaded on biotech, but I gotta run this down. We gotta see what it's about. I don't love to see that. What is this, the daily? Oh, we're running out of time. We got to get this. We got to wrap this up. No, you. No, we're not doing this. It's 2. CCOI is another company that has. I think I got a win on it, actually. It hasn't. Nope, not doing it. LPL. Oh, this one. Wow, you're really up. Are you turning yet? No, we got to look at this. God, these ones are just not making my life very easy today. The daily, that's very interesting.
We got a question from Jonathan, and he's asking why you're using social sentiment as one of your screeners. Is it more useful than other metrics?
Yeah, I don't like to use it in the newsletter mainly because that changes really fast. But in something like this, and as one of 4 signals, I like to use it to just it helps me correct errors. If something's got really high social sentiment, and I don't want to think of it as a short because it could go the wrong way on me, basically. It's a nice check, similar to technicals. Obviously, I drive the investments more on other things, but I like it as a check. And is that I believe I don't know, I actually don't know how to say his last name, but oh god, is it Bear? Is that Jonathan Bear? He's a long time reader. Or there could seemingly be more Jonathans on here. Why am I pitching?
Yeah, I guess you'll have to comment and show us.
Why am I
it just says Jonathan.
Our Jonathan audience? Okay. I just want to add those 2. I'm good with just adding those 2. Now we're going to zoom out. I like what's going on here. We're going to do this. Yes. We're going to do a little, we're going to take that out. I think. I want to check on UNH one more time. I didn't like it this morning. Let's see how I'm feeling about it now. Oh, no. Maybe we're not exiting UNH. That's a nice comeback. 2 hours. Interesting. Yeah, we're leaving it. It's just like, no. All right. We don't have time for this. Not today. Checking on the market. Let's see. 54. Yeah, QQQ option sentiment is looking good. No complaints. SPY 21, it's closing nicely. It was at 22 at midday. See what an excellent speller I am. Sorry. This is paid, but you know, all of you guys all get this free content here for the people that watch. Our loyal watchers. Okay, enter title. Let's just go ahead and do this. Not reinventing the wheel. Oh, God. Not reinventing the wheel here. Then we need to go back and grab this. I don't know why I just typed that out. It's pretty dumb. Okay. 11. All right, we have that. That matches. Have that. All right, we're ready to send. Oh, no, not ready. 11. All right. Done. Nope. All right. Now I'm going to come back here, stop sharing. Oh, Under Armour. Here we go. UAW. Wait, am I saying that right? UAA.
UAA. He also wants to know about Rumble, but he said it's not on Prospero.
Oh, well, I'll try to add it. Yeah. I mean, it looks like there's some sentiment, option sentiment, and some decent social sentiment around UAA. But my general rule, like A, it's below average in profitability and growth, which for a long is pretty much a no-go. And then another no-go is like upside breakout being lower than downside breakout. Granted, it's 45, 44, so it's higher. So it's not a no-go, but I don't like to see upside breakout as low as 45. Yeah, I don't like that. I can check the technicals on Rumble. Hey, this is me now. I'm a technical analyst. Let's check out Rumble. I want Rumble Inc. in Prospero. I like that. It could be a long. I'd watch it a little longer. It's got some positive technical movement, I would say. Not on the 30-minute though. It seems to be losing. Let's check out the 45. Oh, I actually might even be able to let's see. There's a chance that we had it. Let's see if we have it now. There's a chance there's this whole uncovered list, which means like we're missing something in here. And I thought I might find it here and be able to give you some of the metrics, but that isn't the case. Sorry. But it looks okay. Like I would I would keep watching it. Like, you can message me on Twitter. I can tell you what it looks on tomorrow. Oh yeah, look at UBX going down. I held on to it. All right. Any other questions? I'm gonna stop sharing before I go into like the weird mirror mode. Nope. All right. Well, thanks for watching, everyone. Thanks for coming to the Wednesday stream. Wait, I don't see a new Steven. I don't see a new video.
A short?
Yeah.
It is
Oh,
the one.
never mind.
It's the future
Ooh,
AI
it's doing
takeover
well. Yeah,
disaster.
it's doing well quickly. Look away from us. And
Yeah.
yes, everybody, like, please follow us on TikTok, Instagram, interact with our stuff. We really appreciate that.
We do.
All right. Thanks, everyone. Have a great rest of your day.
Thank you, George. See you Monday, and see everybody Monday.